more insight into yesterday's federal budget, let's bring back our featured guest. He's Bill Robson, Chief Executive Officer of the Howe Institute. Let's talk about the capital gains tax changes, which are, I think, the big thing that's on the mind of investors today. We'll take a look at a summary of the changes yesterday. In essence, the government is moving up the inclusion rate. So when an individual, first of all, reaps a capital gain of more than $250,000, now 2/3 of that gain will be taxable. It was 50%, so it moves up from 50% to 2/3 if the gain is larger than $250,000. For companies, the gain moves from 50% to 2/3 of a percentage point, regardless of the size of the gain. And there's one more element as the company does as perhaps a concession, raises the lifetime capital gains exemption from the sale of small businesses. That lifetime exemption now stands at $1.25 million. It was $1.0 million. Bill, the concern that's being expressed here is that on the corporate side, this will discourage a business investment in Canada, which has already been, in the minds of some observers, a crisis.
I share the view of one of the commenters earlier that this is not as bad as it could have been, but that doesn't make it good. And it's interesting for those looking for ironic things in the budget that so much of the language in the budget, talking about the capital gains exemption, talking about the proposal for a new lower inclusion rate for some entrepreneurs, there's a lot of language about the encouragement of risk taking and so on, which they seem to have forgotten partway through as they raised the capital gains inclusion rate on lots of other people. I don't like the stuff on the business side for the obvious reason that any time you you increase taxes on business, somebody's going to pay. Businesses don't pay. It's going to be the owners, it's going to be the employees, it's going to be the customers, and it's going to depress investment further. And and the budget even highlighted this, have a bit of a slow burn investment crisis in this country. This budget will do nothing to improve that. The other thing that I want to say quickly about the capital gains tax changes is that, well, I guess I should mention, so we haven't seen the draft legislation yet. And the way this government has been operating, I can guarantee it'll be done in a hurry, just like the budget clearly was. And there are going to be problems with it. But in the meantime, they've got an awful lot of the fiscal plan riding on that initial rush to realize capital gains.
Right.
And this tax base that is notoriously a very elastic tax base. So that's one of the reasons why I go back to the overall budget numbers and I say, do I believe them? I'll believe those dollars when I see them, but not before, because it's not clear to me that people, and they say in the budget, it doesn't allow for the dynamic effects except for people realizing ahead of June. Mm-hmm. That's a very squishy tax base. People don't just sit around waiting to be taxed. They rearrange their affairs to avoid it.